Demand for British products is growing both at home and abroad. At the start of the third quarter, the UK manufacturing sector grew at its fastest rate in more than 2 years. Unemployment numbers have also improved for the third straight month. The data stronger than expected, and it's also pointing to an improving economy. For more on this, Lisa Cook, economist from Michigan State University, joins us from Ann Arbor, Michigan. Lisa, welcome to Biz Asia America. Good to have you here. Let me start with Europe. The rates are unchanged. The ECB's left it alone. The Bank of England's left it alone. What are they telling us?
So I think that this is very interesting. It's a really interesting time. There seems to be a bit of convergence among these three central banks and central banks across the world. Certainly, there is much more interest in growth than in debt and deficits, and it seems as though both the ECB and the U.S., the Fed, are interested in giving forward guidance and not tapering too soon, reassuring markets that tapering will not happen too soon.
Okay, so let's say I agree with you that tapering won't happen anytime soon, but I want to focus back on the economy itself. The headlines, if you look at the newspapers, have all been saying
Yes.
either Europe is doing terrible or Europe is getting better. Which one is it?
It's both, and certainly in the U.S. we've seen this mixed evidence for the past 2 or 3 years. So we certainly saw stronger manufacturing growth, for example, in England or in the UK, in the Eurozone. We also saw it strongly in the U.S., but we see some weaknesses in other places. For example, in the Eurozone, we see weak credit to businesses. Businesses are getting fewer and fewer loans, and some would say that this is a canary in the coal mine. So we have to keep our eye on things, and this is how I think this is being interpreted by the ECB.
Well, I'm happy that you can at least laugh a little bit about this, but perhaps one of the scenarios might be that things aren't as awful as a lot of people expected out of Europe. Maybe the expectations were so low that they were bound to beat those expectations, so to speak. Look at the unemployment numbers from Greece to Spain to France to Italy.
Oh, yeah.
We can go on and on. I mean, they're awful, but every time there's a small increase or an uptick in the data,
Oh, that's right.
the economists are so excited, they're jumping up and down. I mean, when have we ever seen this?
Well, no, you're right, and it takes a lot for economists to jump up and down. That's certainly true. At the same time, I would say that unemployment is worrying the ECB. It's worrying policymakers everywhere. These high unemployment rates from 27% to 14% are really disturbing. But I think that the emphasis on growth is what all central banks many central banks are trying to emphasize. So that means that they're going to be watching this very closely. Now, one thing we have to distinguish is between the mandates of the ECB, for example, and the U.S. So our Federal Reserve has a dual mandate of employment, augmenting employment, and stabilizing prices. The ECB doesn't have this. At the same time, you can tell from Draghi's comments that the ECB is worried about growth. So this is the way in which they have similar concerns. They don't have similar mandates, but similar concerns.
In 24 hours, we're going to get important jobs numbers here in the United States, and obviously that's going to help drive the markets. But I'm going to ask you to make a prediction for 2014. We'll have a moment for you to think about it, but rank for me which three parts of the world will do best in 2014. Will it be Europe? Will it be the United States? Or will it be Asia?
Well, I don't have to take a moment to reflect. It would be none of the above. Africa is going to outperform all three.
Okay. No, that's great that Africa ranks up there. Now, how about after Africa? The reason I'm asking is because I'm trying to figure out whether Europe will do better than the U.S. or the U.S. will do better than Europe. And, of course, there's a wild card with China and Asia as well going into next year.
Well, okay, so that's certainly a fair question. the U.S. and Europe are so inextricably intertwined. I mean, here in Michigan, we hear about car sales to Europe, for example, and as you know, there's a close relationship between Fiat and Chrysler's numbers turn out to be bad, and GM's numbers turn out to be bad because of sales in Europe. So we're very, very aware of what is going on in Europe, and we've had this close trade relationship for many, many decades. So I think that they will be close together in terms of economic growth. But what we see is a pattern in Europe that we saw in the U.S. Some time ago. So the ECB didn't get involved as early as the Fed got involved in our financial crisis. So this is behaving a little bit sort of the U.S. with a lag. I mean, the data we see is the U.S. with a lag.
All right.
So I think that it might be recovering more slowly, but I think the growth rates of the two may be fairly similar. But I hope that it's as strong. I think the U.S. Economy is picking up steam, and I think it might be a little bit ahead.
All
but
right.
of course,
The economists are just
still
going to have to wait before they jump up and down, at least until 2014. Lisa Cook, thank you very much. Economist,
Sure.
Michigan State University, joining us from Ann Arbor. Thank you for your insights.